Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Walgreens Boots Alliance stock, ticker symbol WBA. And this is the first video, or I guess the second video in the Dow analysis series that I'm doing. It's the first, stock analysis on a company in the Dow. And I basically just sorted all of the companies in the Dow here that I had listed out. I sorted them by market cap, and Walgreens was the smallest market cap in the Dow, so that's the one we're going with first. So first thing we want to look at, that I like to look at, is their most recent earnings reports. So this is for the second quarter of 2022 fiscal year. Their fiscal years are a little bit weird, so they start at the beginning of September. So fiscal year 2022 started on September 1st, 2021. So that means that the second quarter is, from the 1st of December 2021 to the end of February 2022. So it's a little bit weird there, but that's just how they do it, I guess. So in the second quarter, it said their sales increased 3% from the year ago quarter to $33.8 billion, which was an increase of 3.8% on a constant currency basis. They said they had sales growth at Walgreens and the international segment, and sales contributions from the Walgreens health segment due to recent acquisitions and consolidations of VillageMD and Shields. And then they talked about earnings. So net earnings were actually down to $883 million in the second quarter, which is compared to $922 million in the second quarter last year. And there's a main reason, I guess, that it's down. And basically what they said was that last year they had a large gain on the partial sale of the company's equity method investment in Option Care Health. So basically last year they sold part of their investment, and that garnered them a nice profit there that contributed to their earnings. So basically they're saying that last year was an anomaly per se in the upside direction, so this lower number really isn't that bad. So they say that adjusted net earnings actually increased 25.8% to $1.4 billion, which is up 26.4% on a constant currency basis compared with last year second quarter. So earnings per share was $1.02 compared to $1.06 last year, and adjusted earnings per share is $1.59 compared to well, they don't list it from last year, but it was that same increase, around 25.9%. Then they talk about free cash flows here. So net cash from operating activities was $1.1 billion in the second quarter, with free cash flow of $669 million, which was actually a $431 million decrease in free cash flow compared to the second quarter last year. They said that was primarily driven by phasing of working capital and repayment of COVID-19 related government support, and increased capital expenditures in growth initiatives, including a rollout of new automated micro-fulfillment centers and the VillageMD footprint expansion. So these micro-fulfillment centers is really something that I think they're investing a lot in this year, and they talk about them down here. So I guess first we'll talk about the business highlights, which those micro fulfillment centers are part of, which they mentioned later on. So obviously Walgreens has been instrumental, I guess, in vaccinations. So they said they administered 11.8 million vaccinations and 6.6 million tests in the second quarter alone. And I'm not sure if they listed it anywhere here, but I think I saw somewhere else that they have administered over 60 million vaccines in total. I think that might have been on their 10K report. And they talk about some sort of tech they have, Walgreens COVID Index, which sounds kind of interesting, I guess. And they have some sort of membership program, which they increased their membership to around 96 million members, which is actually quite a decent amount. And that is up around 11 million members just since the end of last fiscal year, which is since September of 2021. So they opened 3 of these micro fulfillment centers, and they're on pace to open 22 of them in total in the next 2 or 3 years, basically. And then they talk about some other things, VillageMD and Shields. So they have 102 clinics now open for VillageMD, and they're basically going to have more than 200 by the end of I I guess calendar year 2022 is what that means. So the end of December this year. And they talk about some other things. Strategic review of the Boots business, and they completed the consolidation of their holdings in Alliance RX from 55% to 100%. So I think that means they own all of that business segment now, and they acquired a remaining interest in Germany wholesale business on January 31st. So they do have a fair amount of exposure, in Europe, or they're trying to grow their exposure at least, which is what they're doing there. So next, they do talk about a lot of other things here that is actually pretty interesting, but we don't really have time for it all. But they do, obviously they list sales and revenues, all that kind of stuff in a little table here, which for me is nice to look at. So, obviously revenues, 33.8 billion this quarter compared to 32.8 last year this quarter. So it's just nice to be able to look at this kind of data in a table. But we basically talked about most of this already. And then the balance sheet here. So current assets around $16.8 billion, which is up a little bit, about $1 billion since over the past 6 months. And current liabilities are $22.7 billion, which are up a little bit as well. And obviously that's not the best thing to see when you have your current liabilities larger than your current assets. And it looks like about half of that, or no, sorry, I was reading that wrong. I thought that said $11 billion of short-term debt, but $2 billion of short-term debt isn't too bad. So, that's not the best thing to see there, but if we look, they have about $11 billion of long-term debt. And if we look up here, they have about $2 billion of cash. So, their net debt is between $9 and $10 billion, which for a company of their size, I don't think is really too bad at all. So, they do have that current liability issue, I would say, I would like to see them get under control a little bit and get closer to a current ratio of 1 so that they, have those assets to cover those liabilities in the next year. But total assets sitting around $92 billion compared to total liabilities, which would be around, if I can do some quick math there, around $60 billion, $61 billion. So not too bad there. And next, taking a look at the dividends, we can see their dividend yield is actually getting above 4% now, which is pretty awesome to see. The one thing that I really like about Walgreens is their payout ratio there. So only at 16% on the payout ratio, which is pretty awesome for any company, especially a company that is paying a 4% dividend yield. So their annual dividend payout is around $1.91, which equates, if I remember correctly from the 10K report, to around $1.6 to $1.7 billion per year. And if we recall from the earnings report, if we go back up here a little bit, they are, bringing in net earnings of, they've already brought in earnings of over $4 billion this year alone, basically the first 6 months of the fiscal year. So that's sort of a lot, I guess is what I'm saying, compared to the amount that they're paying out in dividends. So they have plenty of room to grow that dividend. And, their dividend growth is only at around 5%, but it's definitely a, healthcare company, a large healthcare company. So it's not like we would expect them to be growing their dividend a lot. I would definitely like to see them grow it a little bit more, but they have been pretty consistent. It has listed here 7 years of dividend growth, but Seeking Alpha is sometimes wrong with that now. And I looked it up and checked from 2 different sources, and the correct number is 46 years of dividend increases, which is pretty awesome, and shows investors and gives me, if I were to invest, a sense of security, I guess, in the dividend. So now we're going to sort of move on to the valuation, where they're at right now. So taking a look at the PE ratio, currently their PE ratio is around 5 or 6, which is incredibly low. But they did have actually some negative earnings during 2020, basically, which is obviously not good to see, but they have rebounded pretty nicely, and it will be interesting to see, what the next few quarters look like, if they can, maintain some consistency there with the earnings, I guess. But obviously, PE ratio of 5 or 6 is definitely pretty good compared to their historical average of around, 10, 15, 20. And compared obviously to the healthcare sector, they're definitely doing well. The average for the healthcare sector as a PE ratio is around 26, and the average for their sector or their industry is around 28. So from a PE ratio perspective, they look pretty good. And I also did a discounted cash flow calculation on Walgreens, and you can see I got a fair value here of around $56. And if we want to have a little bit of a margin of safety, maybe around 10%, that would give us a buy price of around $50, which compared to the current price, which is at $43, makes them look pretty attractive. And some of the earnings numbers and free cash flow numbers for Walgreens are not super consistent. So I guess you have to take the DCF calculation with a grain of salt, because it's sort of assuming consistency in the growth. And so if the historical, you're basically just taking an average of historical growth over the past few years. And so if that growth is inconsistent, it might not be accurate of the true growth of the business. So that's just something to keep in mind. Obviously, you're making a lot of assumptions with a DCF, but it is some sort of calculation that generally I put a fair amount of faith in that calculation. So we're also going to look at the chart here over the past year or so. So basically been trending sideways and a little bit down over the past year, and since the beginning of the year, like the rest of the market, they've trended down pretty quickly. And just over the past few days, they dropped from around $48 to around $43 per share, and they're kind of on this nice support level right here. They kind of touched that level back at the beginning of December. They touched it again back at the end of February, and they're kind of touching on it right now at the beginning of April. One of the other interesting things to note is, obviously I think their closing price looks like is pretty much the 52-week low, or they reached the 52-week low intraday on Friday, which is also pretty interesting as well. But they don't have a lot of volume in this range, so they could kind of move pretty drastically, I would say, based on the current stock price and based on these levels of support. I would, if I had to make a guess, at least I would guess that they would move to the upside, just because there's a lot more volume in these ranges, and so they would much rather sit their stock price in these ranges, at $45, $47 per share. So honestly, from a chart as well, I think Walgreens looks pretty attractive as well. So the PE ratio looks pretty good, the discounted cash flow calculation looks pretty good, and the chart as well looks pretty good, I think, for Walgreens. So honestly, I think it's a pretty solid stock. They do have some concerns, I would say, with e-commerce and stuff like that, but I think they're definitely working on that, and they talked a little bit about that in their 10K, I think, of moving to some e-commerce sales and definitely seeing some business in the e-commerce realm. So before we end the video, we're just going to come into our spreadsheet and kind of check off this little box here, a little fun thing to do. So we're one down in this series, and we got about 29 left. So definitely subscribe to the channel so you don't miss any of the future analyses on all these Dow companies, and I'm pretty excited for where this series takes us. So thanks for sticking around to the end of the video, and I will see you guys in the next one.